Typically, after somebody buys or starts a practice, one of the conversations we always have is, when should I start setting up a retirement plan? Or when should I start thinking about setting up a retirement plan? And then typically the second question would be well, what type of plan should I set up? So when we talk about retirement plans, there's basically two types. Qualified plans, which the IRS recognizes and says you can deduct for tax purposes, so you can deduct the contributions that you're making on behalf of the employees. And then something you would never really typically do as a dental practice is a non-qualified plan, because you're not able to take a deduction for what you're contributing to the employees. So we're just going to really focus on qualified plans. And in the world of qualified plans, there are basically two types of plans. One is a defined contribution plan. The second is a defined benefit plan. The name pretty much implies what the difference is. In a defined contribution plan, you define the amount that you want to contribute into the plan. So the employee will say, well, I want to contribute X percent of my pay or X amount every so often, be it weekly, monthly, whatever, based on their payroll schedule. In a defined benefit, you actually typically have an actuary that sits down and determines at age 60 or at age 65, we want this benefit. It is much more complicated, but it'll allow people to contribute much more. For most of my practices, what we do is we start out with a defined contribution plan. Typically, there are two types of defined contribution plans we talk about. One is a 401k and one is a simple. The simple, the letters actually mean something that I'm not going to get into here, but the plan is just what it says. It's very simple. The employer matches dollar for dollar up to 3% that the employee contributes. But that's basically it. Beyond that, there's no real paperwork or anything else that has to be done once the money's sent in. It is the employee's account in their name, and it will always be tracked for them. A 401k plan can be much more complicated, and I tend to shy away from 401k plans because I don't think the benefit is that much greater. I am not relying on any of the dentists that I work with being able to retire based upon what they put into a simple plan or a 401k plan. The problem with the 401k plan, in my mind, is that I've seen so many problems where dentists were out of compliance with the IRS requirements and the filings of the forms and the actuarial testing and everything else you have to do to justify the benefit over the simple. With that said, there are two situations in which I would probably choose a 401k over a simple plan. Typically, the 401k plan side is going to be more robust and have more tools for helping the employees plan for retirement. If that's important to your employees, then I would consider going with a 401k. The second reason I would consider going for a 401k is if your 401k plan has a Roth option. This actually benefits the higher income taxpayers like the dentist that will be able to make Roth contributions that they wouldn't be able to make otherwise. So if I'm going to have a 401k plan, it's going to have a Roth option. If you currently have a 401k plan and it does not have a Roth option, I would recommend having the plan redrafted. With a 401k, you can also do what's called a profit sharing contribution, which is an employer contribution made for each employee based upon their payroll relative to the owner's payroll. Very rarely do I ever see it make sense to do profit sharing contributions, and I'm actually going to do another video explaining that at some point in the future. The other type of plan I mentioned was a defined benefit plan. So normally, once the practice is up and running and the practice is a little bit more mature, we will move and add what's either a cash balance plan or a defined benefit plan on top of the 401k plan. A defined benefit plan defines the benefit and will allow the business owner to put much more money away. Regardless of what you're thinking about in terms of retirement plans, your CPA should be able to help you structure it in such a way that you get the most bang for the bucks from the plan. That would be the goal of it. What I would recommend is sitting down with your CPA, discussing the options that are out there, and figuring out which plan is right for you. If you have any questions, please feel free to contact us at questions@mydentalcpa.com.